Hey everyone, Codex here. Today what we're gonna do is take a look at the logarithmic indicator and the risk metric to discuss the idea of finding our peak. If you guys like the content, make sure to subscribe to the channel, leave the video a thumbs up and a comment, and let's get into this one. Now, there has lately been a lot of news surrounding Bitcoin, and a lot of people are suggesting the idea that Bitcoin has already found its market cycle top at 69,000 US dollars. However, others think that this move to the downside is nothing but a temporary shakeout before heading to the upside once again. And today we are going to be taking a look at 3 different indicators so you can make up your mind on where we may be heading next at the end of this video. So we're going to start with the logarithmic indicator, which is defined by the equation right here, which is the log of the price. X is the price divided by the 21 weeks EMA equals the level of overextension, which is right here on the right y-axis. And this indicator basically uses the 21 weeks EMA as a signal to see whether we are overextended or not, since there is always this idea around the market that whenever we are above the 21 weeks EMA, then things are bullish, and whenever we are below it, then things are bearish. So this indicator basically shows how far away we are from our 21 exponential moving average. And clearly there is a trend here, and you can see that each time our indicator touches the white upper line, we get a massive pullback. The first time we experienced the downward pressure upon touching the white line, it was back in June of 2011 at the peak, and the price of Bitcoin dropped roughly 93%, and we entered a bear market that lasted about a year and a half or so. At the start of 2011, Bitcoin rallied to find its local top back then at 265 US dollars before dropping all the way down to 52 bucks. And of course, our indicator touched the upper white line once again. A few months later, we experienced the same thing. We found our top on our indicator as well as with our price, and this led to a long bear market. And by the way, this was the longest bear market ever with BTC. The famous rally of 2017 ended up the exact same way. We touched the upper line before experiencing another massive 83% correction. And lately, this happened twice actually, in January as well as in February. Now we touched this upper white line in January where we experienced a pullback, but it wasn't that massive in comparison to the other ones. We basically experienced a 30% move to the downside, a modest move to the downside before trending up once again. However, this one has led to a much bigger correction, which was from 64k all the way down to 29,000 US dollars. Now we clearly can see that each time we get in contact with the upper white line, we get a pullback, and this happened 1, 2, 3, 4, 5, and 6. This happened 6 times throughout BTC's history. However, our peak isn't actually at 64k. Our current all-time high is at 69,000 US dollars. And this makes us question, is 69,000 US dollars really our market cycle top? Or is this pullback that we are currently experiencing just a shakeout before heading to the upside once again? In my opinion, if this indicator is correct, and bear in mind it has been right every single time in the past, then 69,000 US dollars is our top for now before heading to the upside once again, before trending up. 69,000 US dollars isn't our market cycle top since we didn't touch the white upper line. However, this model can also be proven wrong. I mean, no model is perfect after all, but look, if this model isn't that accurate after all, then so are the log growth curves, because each time Bitcoin has found its peak, let's say, we were up into this red area. However, this market cycle, we still haven't visited the red zone yet, which is currently between 126k and 240,000 US dollars. So all I'm trying to say now is that, look, we may have used these indicators throughout the last several years, but after all, this cycle, this market cycle, can be super different from any other cycle that we experienced. And if that's the case, then you need to prepare yourself for the worst possible outcome. There are a lot of models that have lost their accuracy this year after the recent downtrend, and the log growth curves as well as the logarithmic indicators will be next to lose their value and their accuracy if we are heading into a bear market. And this is why the risk metric will always be your best chance and your best bet to make money in the space. Now what this is, it's a risk model, or let's call it an index, that I've developed in order to know when Bitcoin is overbought and overvalued and when it's oversold and undervalued. We have released the risk metric for Solana, BNB, DOT, Link, and a few other cryptocurrencies for free, which you can get by joining our Telegram group. You will find it pinned. And by the way, this model, the model for Bitcoin, is still in the trial version, which I will work on more in the future. However, this doesn't mean that we can take a sneak peek at it. Now, the risk metric is on the scale of 10, with 0 being the lowest possible risk and 10 being the highest possible risk, right here. And look, each time we start going up into the red zone above 7 on our indicator, things start going up fast. Everybody is buying, Bitcoin is on the news, breaking new milestones every single day, and even your grandma is asking you about it and she wants to invest. And at that time, you know that it's game over and things will crumble down. And look, each time we go into these regions, it doesn't take us a long time before seeing a blow off top and having a massive crash. And this is where you should be buying. You should always buy when the risk of the asset is in the green zone, in this case below 3. Now, I always say you should start buying below 4 when the risk is below 4 and start selling when the risk is above 6 and gradually do it, but to each his own preference and to each his own risk tolerance. There are two types of investors. There is Jack, for example, who's 19 or 20 and doesn't care about a 30 or 40% move to the downside. And then there is another man who starts shaking after a 2% move to the downside and who needs a bottle of vodka or whatever to handle the pressure of this market. I'm more of a Jack though, but this doesn't mean that you should follow me. I think it's better that you start gradually buying in these accumulation phases and go maybe with 1x here, 2x here, and 3x of the money you intend to invest right here, for example. By 1x, I mean 1 out of 6, which in this case is 16.66%, I think. And look, this approach will help you to accumulate Bitcoin as long as it's trending down so that your average buy price can be as low as possible. Now, the last time to accumulate according to this indicator, Bitcoin was right here at slightly less than 29,000 US dollars when Bitcoin price dropped 55% from its local top, right here. And here we are once again at 40k. And of course, we can go much lower than 40k or 39,000 US dollars. We can even go to 30k. I don't know where the bottom is. All I know is that this right here is the best chance for you to slowly accumulate as the market is going down. And if you use this indicator throughout this cycle, then you would have sold right here. And I know this may be 15 or 20% far away from our all-time high at 69,000 US dollars. But look, if your goal is to sell at the exact top, then you will always keep getting wrecked and you will never manage to do so. And I think that everybody would prefer missing on another 15 or 20% move to the upside than getting hammered by a 50 or a 60% pullback. So this was about it, guys. I hope you enjoyed the video. If you did, make sure to subscribe to the channel, leave a thumbs up and a comment if you have anything to say. Also, make sure to join our Telegram if you want to try the indicators out, and peace.